Hey guys, Mike here. So another jam-packed video for you, and I mean jam-packed video with tons of data and stuff. And we're going to look into a lot of the big topics. You know, breadth is the big thing everybody's thinking about. We're talking about rotation, getting more participation in more stocks that are usually moving up that just haven't been moving up, and I'm going to show you that. We're also going to talk about, yesterday I touched on it, you know, a liquidity drain, things like that, and if it'll affect the market. But a couple of things I'll show you today, to me, are going to affect it even more. And then, of course, if it goes in concert with all the treasury bills, yeah, you know, you can see a liquidity crunch, so to speak. But again, just keep in mind how bent over backwards these people have been trying to keep the market from going down and stuff as well. But I did find funny, we talked about those headset that Apple had rolled out yesterday, right? So then I found this video probably about 3 hours after that video went out, showing the reaction of the crowd at the Apple event and how they reacted.
Apple Vision Pro starts at $34.99. It will be available early next year on apple.com.
Yeah, so we weren't the only one reacting that way. So again, the comments, I mean, I will not be buying a pair of these. I think that's a ridiculous price. But, you know, maybe it turns out to be super cool. But the truth is, I don't mind using my fingers. I don't know. I like being active and stuff. So I'm sure somebody will have them. But the one thing I did think, I bet you, you know, now people are looking at that price. They're looking at the goggles that are sold by Meta, and I think that's another company that has them. They're looking at their prices going, wow, I thought those were expensive. Those are pretty dang cheap, right? So more people might start actually buying those. So, you know, we'll have to see how that works out for Meta. But, you know, going into the liquidity stuff everybody talks about, because that's what really, especially this market, drives the market, right? And whether financial conditions are tightening or not tightening and stuff like that. And I showed you, you know, I try that every day. And, you know, this is the stuff that I think you need to be more concerned about. Like if it does pass, that big banks will have to boost their capital requirements by 20%. That is a massive number, by the way. That absolutely is going to cause a liquidity problem because they already don't want to lend stuff out to begin with. And if they got to hold on to 20% more for capital requirements, that's going to make it even worse in a high rate environment stuff because defaults will absolutely, and they're already starting to, you know, pick up in certain age brackets and everything. And the other thing is too is the U.S. money supply is projected to decline even further, as you can see right here. And I believe this was J.P. Morgan, yeah, estimates this and stuff. And you see we've gone below the zero line before during the 08 crash, .com bubble. Obviously we're farther down below than we've been, but again, you know, you boost, you know, money supply that much and then you have a drop like that, then yeah, I mean, you can see this continuing to go down, but they think it's going to be like a $1.1 trillion decline, even more. And so we'll have to see how that affects things. It's not going to like improve things and go, oh, this is great for the market in general, even for the economy. Another thing to pay attention to, and our friend Charlie Baleo come out with this, is just look at growth rates on a global scale. Like this just isn't, you know, happening in the U.S., right? So you have Q1 of 2022 versus Q1 of 2023, and then the difference, right? And you see a whole boatload of red in some major economies, okay? And so just keep that in mind. Again, the China numbers, I don't even know if we can trust those or not, but you know, when you look at that, I mean, there's a whole lot of red because over the world, especially like Australia, for example, just did another rate hike, which I don't think people were expecting. And we're going to pause, maybe do another rate hike, who knows? But even holding on 5% or above, we haven't done that in a long time, right? And you just look at the slowdown, it's obvious, not just here, but across the globe. And what are we? We're a global economy, right? I mean, Apple does over 50% of its revenue outside the U.S. A lot of these companies do that actually hold up the stock market, right? And so that's something just to keep in mind and keep in perspective and just think. And again, I'm under the perspective, I don't know, you know, can we have a functioning economy like without really grinding to a halt with 5% or higher interest rates? It's just been so long, and the crack addict has been fed its fix for so many years now. Nobody really knows. We got to see, right? Because people would have thought by now you would see these lag effects that interest rates have. But the reason why, and again, I don't know. I'm no spring chicken, so please put in the comments if you know this. But I don't know of another time where I thought about this day where we've had so many supply and demand imbalances, right? And what do I mean by that? At the same time, I've seen like one here, one there, one here, one there. But at the same time, think about oil, for example. They're going to cut production, right? At least the Saudis are, because they want to keep oil prices high. But you still have them saying, well, we're not going to try to like really put out anymore, right? But there's still a demand for it. As you can see, we're still traveling. I mean, Royal Caribbean Cruise Lines hit a new 52-week out a day, and so I mean, we're still traveling like crazy. I showed you that. And so there is a demand for it, but the problem is there's a supply crunch, right? And then they plan on keep cutting it down because they want to keep the supply low, right, and keep the prices high. Okay, what else do we got going on? Look at employment, right? You got plenty of jobs out there, right? Wages are still going up, and yet there's not enough people to meet the demand, right? And there was one other I can't think of. So it's like three things now where you have this supply is here, demand is here, and there's just no balance going on. And that's why you don't see these lag effects taking place in interest rates, why they really just hadn't grinded the economy to a halt. Oh, the other one, housing. Thank you. I'm just like thinking about this, which I'll show you the stocks later on. But housing, right? Supply is here, right? Demand is still here. It's come down a lot, right? But it's still higher than the supply is. In my state, they can't build them fast enough, right? And in my state now, all of a sudden, in a lot of areas, it's cheaper to rent by like $400 a month and everything. But the price stays high and there's no crash because why? There's just not enough supply, right, versus demand. So, and so I've just never seen it where we've had the real estate market, the energy market, the employment market have these supply-demand imbalances at the same time. It's like a perfect storm, right? And which, of course, throws your business cycle off and everything. So, I don't know. Let me know in the comments if you remember a time when that was the case. I've never seen it. Now, if there is like a liquidity crunch coming up here, keep in mind and make sure you look at these right here and keep track of something like this right here. So this is the equal weighted SPY versus obviously the unequal weighted SPY. And you can see the SPY has just been totally killing it, right? And then all of a sudden though, you're starting to see the equal weighted SPY move up, the equal weighted S&P ETF that is, move up. But keep in mind if there's a liquidity crunch, you could see maybe money move out of tech because most of them are at all-time highs or just sitting at huge like resistance levels and stuff, and roll into other stocks that are non-tech, which would I'll call it in theory actually have the equal weighted ETF for the SPY moving up, right, against it. So keep that in mind. That could happen, and you can just see right here. I mean, this is the equal weighted versus non-equal weighted. I mean, the SPY is up 12.4% here today, and the equal weight is up 1.5. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And of course, why is that? I mean, again, we talked about this. This is 8 stocks, the big 8 mega caps. Look at the beginning of 2023. These 8 stocks, Apple, Amazon, Alphabet, you can see them at the bottom, NVIDIA, made up 22% in the weight of the S&P. Look at it now. We're at the beginning of June, 31% now. That is absolutely insane. But that, again, these are safe havens to pile into because they got a lot of cash. Those high interest rates don't really bother that much. And again, it's just a safe haven for people to go into, right? And they're global stocks. And, here's another one just to drive my point home. This is the S&P 500's performance versus the equal weighted counterpart year to date. It is the best ever on record. This goes back to the late 80s. And look at that. I mean, it's not even close. But here's the crazy part. When you look at this, look how many times it underperformed the equal weighted, right? Way more than it actually outperformed. But look at how much it's outperformed. That just shows you what kind of, a year of first, right? We keep saying a year of first. And these last 365 days has been a year of first, and what has to happen for this to be a real bull market, because we'll hear people say, well, it's up 20% off the lows. That means we're in a new bull market. Maybe that's the case, but what has to happen, and the reason why people are making a big deal, which I'll touch on, about the Russell coming along, other stocks coming along. Look at this right here. This is the percentage of S&P 500 members outperforming the S&P 500 index. The lowest it's ever been. All right, this tracks back to 1993, and it's beating the rest of them by a country mile. So you can just see not a lot. Okay, not a lot, and that is not a bull market. You have to have other participants. You can't have 10 stocks because they're so heavy weighted, dragging things up. Okay, so people are looking for that turnaround. They're thinking breadth will catch up to price action, things of that nature, and that could be the case. That's what we're watching for. Okay, that's why you got to remain in neutral camp, follow the data and stuff, right? And what you're looking for, and I give this to members every single day, is this right here. This is the NASDAQ 100 above its 200-day moving average, the S&P, and then the Russell 2000, right? And you can see, obviously, small caps are lagging big time. This is the 50-day moving average, okay? And so, you have to have more stocks moving above the 50-day moving average, like a day like today you saw for the Russell, that's the case, versus the Qs and everything. Now, going into the Russell, right? Everybody will be talking about this because, again, we had a big pop, big sell off, and now a big pop, and we moved above that resistance area, right? I like to see it come back down, turn that back into support officially for me. But again, it can keep moving higher. And if we move to the outer time frames, you'll see I like that trend line that's coming down right there. On the hourly, you can see it. And again, it's hitting one of those indexes that gets overbought for a long period of time, right? It looks like the MACD stretch on the hourly. The RSI is still an overbought, but that trend line is going to be the key around 186 in that area. And you can see if it breaks that, then we get to move up to the next challenge, which is going to be the 184 to 186 area, huge demand zone. Because remember, this has been stuck in a range for months. I mean, basically over a year now, right? And so if it can break out of that right there, then of course the next challenge is going to be 200. So that's the thing to keep an eye on. And if you look, I actually did this yesterday, but I uploaded Russell 2000 stocks, and you can just see all the green. I mean, again, when I say small caps, we're talking like 1 to 3 billion. Okay, these aren't like on pod type companies. Okay, so keep that in mind. But you can just see all the green as we roll down this thing. Okay, the other one, which I never track, but the IWC, this is micro caps. And you can see right there, I'm telling you, this is why I believe in trend lines, support lines. They work. It's the algos kicking in on this thing. This thing bounced perfectly right here off this support resistance line right here. I mean, just perfectly. They're getting demolished. And then bam, hits that. See you later. Pops back up, starts winning, right? I mean, that's just the way it is. Algos run this game, okay? And this had a bullish MACD cross right there on the weekly. And the RSI is above the 50 on the weekly. So again, on the daily, still got room to run the RSI, not overbought yet. MACD crossed that 0 line. So, micro caps are looking bullish as well. So is the Russell. Again, let's get a few days in a row, okay? Instead of having these, big moves up, big moves down, that kind of stuff. And I'm just going to add a trend line right here because I think when it breaks above this right here, that right there will signal, obviously, to me, big time bullishness again. But I expect this pullback because by the time we get up there, we're definitely going to be in the overbought territory. I'm talking about a short term pullback. Maybe a little consolidation before we move up. But we'll have to see. I mean, as you saw, these things move up 2 to 3% in a day with no problem. Of course, what do you see on the Russell a lot? Regional banks. That's one reason it's moving up, right? It's got a lot of small banks on it. And you can see they're trading like penny stocks again. But what else is trading? And these aren't on the Russell or anything, but man, the real estate stocks, one of the members pointed these out, so I started looking into these things. You would think with the little supply we have, they wouldn't be doing great, but a lot of these, look at them yourself, are either setting new all-time highs, fixing to set new all-time highs, or getting ready to have a huge, huge possible breakout. So make sure you look into those and stuff. I'll be doing a members video on that very soon as well, showing detail on that stuff. But one thing that's got me concerned, and I like to keep track of this because it's like a contrarian type indicator. They'll let you go, whoa, hold on a second, tap the brakes, is what's going on with the fear and greed index. I track one of them for the members, which I like the most. It shows how many stocks are, what percentage is in an uptrend. And versus the CNN fear and greed index, it basically has its 8 indicators it uses. But I've never seen them this far apart in the spread, right? I mean, you got the CNN one is giving you 74, and 2 more points, we will be at extreme greed. We all know what that means, right? We've seen that movie. It's never a good thing. But then the one I like to track is only at 54%, saying 54% of stocks are in an uptrend, which is not great, right? Especially if your fear and greed index is almost at extreme greed. Usually this is in the 70s and signifies there's going to be a nice, decent pullback. And so keep that in mind. It just so happens, it's so funny to me that it's coinciding with the point in time where the Treasury is going to start trying to refill their account, issuing bonds. All these other stocks, the big mega caps are either trying to set new all-time highs, which usually you get a pullback after that happens, or just setting a major resistance, right? And so, are fixing to fill a gap, like Meta, right? It's not too far from that. And so it's always funny how it coincidentally just coincides, but to see that big a gap in those two fear and greed indexes, I've just never seen it before. And so that's something else I'm trying to look into and see what the heck's going on. But that just shows you on the one, which talks about those uptrends, of how low the breadth really is, right? And so it's the lowest we've ever been in a new bull market, right? So again, though, this is what? A year first, right? It's a year first. That's just the way it is. But, I was talking yesterday about I was going to do a rant today because it's just one of those things where again, this isn't a political channel. It admit to be a political channel. It's not what this is about. But I was having a conversation with my neighbor last night, and there was a comment from one of you guys that stuck with me when I was talking about Memorial Day weekend, how, there's people, soldiers that have given their lives to make sure we have freedom in this country, like freedom of speech, freedom of expression, things like that, whether you like it or not, right? And, we were talking about it, and I just said, man, if you just look at it, I don't know where our country's going, because it's not going to me in the greatest place in a lot of areas, right? Again, it isn't political. I'm just saying I don't care if Santa Claus is in charge of a state or our country or whatever. But, think about this. How many times do you hear people rail, and this is one thing that stirs me, rail against socialism, right? They say, we're a capitalist society. That's what we do. But what happens every time there's a crisis in our country? What do? We totally give up our freedoms to the government. We let them do whatever they want to do. And they totally go socialism all the way, right? Look what they did in 2020. The Treasury account, I just showed it to you, went to 1.2 trillion. Why? Because they sent out checks to everybody, sent out checks to companies that didn't even need it, then forgave it all to people who should have paid it back, right? Didn't matter. It just amazed me. Oh, wait, what do? We got in the car business. We bailed out the car industry, right? We bailed out all the banks. Didn't even get them, get the money back, I don't think. Didn't even put any stipulations on it, right? But we let them do it because why? It's all about the money. We got to save our 401ks and our reason. We trust you to do the right thing. But it amazes me, same people that rail against anything when it comes to like socialism, but can't do that. And then they go, crisis. Okay, do what you got to do, right? Isn't that crazy? And we just like hand over our rights. And the reason why that worries me is I'm telling you, and my brother always says this, I'm sure somebody famous pointed this out, you give the government an inch, they will take a mile every time. All right, and what do I mean by that? I used to ask my grandpa, he was in the 82nd Airborne, World War II, and he fought in Europe his whole time there, 3 years, right, fighting the Nazis. And I used to tell him, I asked him, I don't understand how one man can convince an industrialized nation of smart people, not some third world country, to do what they did, right, to the Jews. How is that? I just watched a documentary on that stuff just the other day. How did that happen? And he said, it's simple. He said, it's happened in multiple countries through history, and he says it's the right person at the right time with the right message. And when I look at our country and I see how easily we bow down to the government and let them do whatever they want to do, they just make the rules and laws up. And we might like it at the moment, right? Because, hey, we're getting checks and we're getting this and that and the other. But there's going to come a time, one of those inches, you ain't going to like very much, right? And that's how the government tests it out. They go, look what we're doing here, right? It started in 2008. Right? Look what the Fed did. They say they propped up all these markets. Now it's not even the free stock market anymore. It's not free market anything. The government owns the stock market, the bond market, all of it. And again, let me know in the comments. I know it fires people up, and this ain't me coming at the political party anyway, because both parties do it, right? Both parties do it, and a lot of people do it, and it just worries me. It worries me for my kid more than anything. I'm not a spring chicken, but who knows? Anyway, I'm gonna stop there because I can go on for 2 more hours and everything. So anyway, guys, hit that thumbs up. Hit that subscribe button if you got anything out of this and you like these kind of videos. And I'll see you tomorrow for another busy day. You can guarantee that. All right. See you later.